speaking, of course, about Aydin Senkut. He's president of Felicis Ventures. Aydin, it's great to have you on the show. I know you just got together, what, $40 million in financing for your first institutional fund. Why are you using it to bet on mobile right now?
Margaret, mobile is one of the really interesting areas that we're looking at. We feel it's a new phenomenon. It's similar to the early days of the internet, where we feel these applications that we can have now on Android and iPhone are going to make a big impact. We also think there is going to be a billion-dollar company, if not $100 million company, created in this sector based on a revenue model of subscriptions, and we do think that the growth is tremendous, and we're very excited about it.
So with that forecast of a big name player potentially growing in the mobile space, who are the names that you're finding opportunities in right now? I know you're seeding a number of startups.
Yes, we are involved in a number of really exciting ones. Probably a good example of those is Inkling, which we have backed earlier last year, and they just announced a new round of funding last week. Inkling is an education company that is trying to redefine textbook as it were to only exist on digital mobile devices like iPad. We think it's going to be revolutionary. It's going to make a big impact on education. It's founded by ex-Apple veterans, as well as some people from MIT Media Lab and Google. We think it's going to be a game-changing product, and we're very excited about it. And we have a few others up our sleeve that I'm very excited about.
And you've had some recent success as well with Mint.com. I know did quite well in the personal finance space. How much was your initial investment, and how much did you get in return?
So the return was actually pretty decent. It was a great multiple. I was one of the few angels that invested not just in the seed round, but also in Series A and Series B. Aaron Patzer, obviously an amazing founder, and we were very excited about that outcome with the acquisition by Intuit. It was our largest exit to date, and it was a very decent multiple.
Right, and it sold for, what, $170 million after 3 years, though. I want to talk to you about some of those opportunities, as you mentioned, that you're finding right now. You point out that you think there's a key play to be found in tying online searches to offline commerce. What do you mean by that?
Yes. Sure. I mean, I think a good example is Google became a $100 billion company, basically allowing people that are searching for products and matching them to companies that are offering those products online. And I think the holy grail of this business is actually being able to connect people that are online to commerce that is happening offline as well. I mean, that's a $1 trillion market. A good example of one of the up-and-coming companies in this area is Groupon. Groupon actually bought one of our portfolio companies, so we're now a shareholder in Groupon. They're growing incredibly fast. They created an amazing amount of revenues that far exceeds hundreds of millions of dollars in just a few years. And I think there will be more companies created in this space, and we're making big bets along these lines. And we think it's going to be, again, very fundamental and game-changing.
Now, when you're making some of those big bets, are you forecasting that things are going to get more favorable for IPOs as you exit those investments, or are you just simply looking for takeouts, more M&A at this point?
Well, I think one of the great things about our model is we are actually not counting on merely the IPOs. We have a very conservative fund size. So, and we've had roughly 16 exits to date. All of them were M&A exits. We don't think the M&A is going to slow down. And it seems like the IPO market is picking up next year. We're very excited about the fact that we do have a few companies that could be great IPO candidates in the next 3 to 5 years. And we love the fact that we can play both ends of that spectrum.
Quickly, I want to ask you, we saw yesterday a valuation being put on Facebook in the secondary market at $34 billion. Do you think that's a fair estimate? And how do you come up with that valuation at this point?
So I think one way to look at that number is if you were to look back at Google's IPO, if I remember correctly, the price-earnings multiple at the IPO was around 154 to 192 range. if you were to apply it to the $34 billion valuation, we're roughly talking about $170 to $210 million in earnings. And now, while we don't know the official numbers for Facebook, estimates for their revenues last year was around $800 million. Let's say they double that, and they have a 10% net profit margin. We're roughly at the numbers that I mentioned. So I would say it's in the ballpark. And obviously, we have a very interesting play here for a company that connects 500 million people and growing very fast.